Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Friday the 2nd of May. It's Non-farm Payrolls Friday and Euro dollar should certainly be one of the big movers on the day, you'd imagine. It's just backed away once more from a test of that 39.05 level, so that maintains this trading range that we've been in for the past 2 or 3 weeks. No real moves. It's been a bit messy in the last couple of days. Sharp move down on the on the German CPI number, followed by the Eurozone CPI data that on Wednesday that created that sharp move higher. Yesterday, then we had the US ISM number that dragged the euro dollar lower once more, and just early bit of dollar strength has maintained that slight shift to the downside. So we've maintained this trading range in euro dollar. Intraday, though, what we have actually now seen in the last couple of hours is this breakdown of a move below 38.55, which actually gives us a downside target from a top pattern there of 38.20. So that could be a little bit of a downside target for you to play around with. However, more than likely we're going to be expecting a bit of consolidation in front of this payrolls data. Traders don't tend to take too much of a view in front of payrolls for fear of being sharply on the wrong side. So that could be what we've just seen, a little bit of unwinding of this move to the upside, following on from that Eurozone CPI data. The euro dollar has just dropped away. These intraday momentum indicators have just unwound, and to be honest, I mean, although yes, you have got this completed top pattern that does suggest a downside shift towards 38.20, I'm not necessarily thinking that it's going to happen. You could just see it back towards mid-range. You've got a fair amount of support around that 38.50 mark, which is pretty much the low where it hit just now. So you could see it just building a new level around this point here, but I still think that this payrolls number could be the catalyst for a move on euro dollar. Payrolls comes out at 1:30. There's two different ways of looking at payrolls. You could see if it's a very strong number, then that would certainly suggest that the Fed is firmly on course on its tapering and potential move towards tightening. So that would be dollar strength pulling euro dollar lower. However, there is also the fact that if it comes in line with expectations, it doesn't necessarily drag forward any sort of interest rate expectations of a hike in the States, and that would be certainly positive for. I think that would probably be reasonably positive for euro dollar, because it would suggest that the US economy is in a decent state. It would have recovered from the winter issues that it had of the harsh polar vortex, but also that the monetary policy would not be necessarily impacted too strongly. So that would be positive for risk appetite, which is positive for euro dollar. So I think what we're seeing is a consolidation now, so in front of non-farm payrolls. Anyway, I wish you good luck in your trading on non-farm payrolls. There is a slight dollar bias in the early moves, as I said, but I don't imagine it will amount to a great deal, with caution generally tending to take over. Okay, I will wish you good luck with your trading around payrolls, and I will speak to you later. Thank you.